Hi, my name is Syed Jaffrey. I'm certified in ICA from Manchester University, certified in CISI, Chartered Institute for Securities and Investment, London. I have worked almost a decade in the financial services industry, and today we will be covering participants involved in a financial services industry and role of each participant in one single equity trade. Let's start. So basically, when we talk about financial services industry, industry is way bigger than investment banking. In India, we have a habit of getting involved into opportunities which are more aligned with the investment banking, and almost most of the industry participants are selling this name investment banking. But do we know that what is the size of investment banking industry, and do we know what is the size of financial services industry? Financial services industry is a whole industry. Investment banks are one participant in a single trade life cycle. When we talk about trade life cycle and participants involved, let's take an example that we have ABC Limited and we have Mr. X. Mr. X is inclined to buy 100,000 shares of ABC Limited, which is listed at NYSE, and the currency is USD. So it is listed at New York Stock Exchange, trading at, let's say, $100 per share. Now to execute this order, and the quantity is, let's keep 1 million. So now Mr. X is a sophisticated investor. Mr. X does not have time to execute his own trades. So being as a sophisticated investor, being as an institutional investor, we rely more on the prime brokers or investment managers. So in this case, what Mr. X will do? Mr. X will initiate an order. Mr. X will send SSI, standard settlement instructions, to the custodian and investment bank at the same time. Let me erase this because we need to understand more in this. So firstly, the order is going from, the order will be like this: by ABC Limited 1 million at the rate of $100 NYSE. So this is the order. Now the order has gone to first custodian, and at the same time the order has gone to investment manager, or we can call them prime broker or investment bank. All of the terms can be used interchangeably. Now from the custodian side, it is the custodian's responsibility to validate the order. So the order is authenticated and has received from the Mr. X. It shouldn't be like we have received a random order and we can execute from the custody side. Once the order is validated, when the authentication is done, then from a custodian trade execution team side, they need to check if Mr. X is having sufficient funds in the account. Or do we need to inform to the investment manager from the custody side that Mr. X requires so much fund in the custody account. Now this check is done. Post that, from the custody side, the confirmation and money will be transferred to the IB, investment bank. Now the investment bank has received money. At the same time, the SSI, standard settlement instruction, has been received to IB. As this is trading at NYSE, at a listed stock exchange, we will be needing other participants in this particular transaction. So precisely which are the other participants we will be needing? Let me make more space on this. I'm erasing this because we have these details above. So this is the exchange traded trade. So the other participants which we will be in need will be clearing house, depository, So clearing house is responsible for the smooth settlement of the trade. So from the front office of investment bank, the trader would have executed this order. This order is of the buy order. Now there will be someone who will be doing sell order with the same quantity and same price. And the beauty of exchange traded trades are that until unless the quantity and price does not match, the order is not executed. In exchange, order execution is not guaranteed, but order settlement is guaranteed. Reason being, we have clearing house. So what is clearing house responsible for? They are responsible for the smooth settlement of the securities. Now, depository is responsible for the change of ownership. As of now, we do not see bearer securities. When I say bearer securities, these are the securities which does not have any ownership printed on them, the kind of securities which was used before. Now we have dematerialized securities. So in the case of dematerialized securities, security does not get transferred from one participant to another participant or from one party to another party. So what depository is responsible for? Depository will be changing the ownership based on the trade settlement date. This particular trade is happening at NYSE. Therefore, the trade settlement date will be T+2. If it would have been happening in India, let's say BSC or NSC, the trade would have been T+1. The Indian trading system are following T+1 right now. So we will stick with the T+2. As the trade passes through depository clearing house, we need certain other participants in this particular transaction. Trade is not yet completed. Along with this, we need the intervention of regulators. When I say regulators, it means securities market regulators. In US, it is SEC, Securities Exchange Commission. So being part of, let's say, investment banking, custodian banking, or fund administration, if you're part of the trading team or trade life cycle team, there is a separate team which works with the regulators closely. So they need to share details of open trades, closed trades, and failed trades with the regulators within the agreed time given. The challenge with them is the most critical area is a failed trade management. Because within the given timeline by the regulators, we need to ensure that failed trades are settled. Now, as we are now aware about the role of regulators, the next participant which will come into picture is fund administrators. So this fund administrator or third party fund administrator, what they do, they take the outsourced work of these IBs or investment managers, or we can call it AMC, asset management company. It can be a hedge fund, it can be a private equity. So what they do, they do their accounting, they maintain their books, and they release those books based on the agreed frequency. So in the Indian market, the jobs which you see daily, that fund accounting, it can be hedge fund accounting, it can be private equity accounting, it can be real estate valuation, and of lately we have seen the crypto accounting also in India. In the traditional, we call it mutual fund and pension fund. Those activities are performed in a fund admin as a participant. We believe that this particular trade is settled, there is no complication in this particular trade, and all of the participants are included in this particular trade. And we have understood what are the roles of each participant. There is another participant which is really important even before executing this trade. So this participant is data provider. When I say data provider, this investment manager or the portfolio manager of Mr. X would have done some research, certain research that you can buy ABC Limited into your portfolio with with this particular data, because without data they cannot take those decisions. In the institutional clients, or when we say institutional investors, they do not go based on the influencers. Like we have seen, there was a report published in India during lockdown. 85% of the retail investors have lost their money in future and options. So everyone is fascinated to do trading, but it is important to understand that what is on stake. But here in institutional investors, things are slightly different. The volumes are more, that trading is done with a different purpose. There can be different reasons why they are trading. So they need data providers. Who all can be data providers? So Bloomberg is one of the world leading data provider. Reuters is another one. So there are certain other data providers. This is an overview, and this is a basic plain vanilla understanding of different participants involved in one single trade life cycle. And the financial services industry is way bigger than this. Now, professionals who are inclined to work in investment banking industry, are professionals who are working with, let's say, custodian or fund administrator or stock exchange, or any of these participants. If you're working with any of the global bank, you're doing a really great job. But if you don't know that these all participants are involved in a single trade, my suggestion is that please do research. Know what you're doing every day. Understand why you're doing it, and what is the impact of this on the client, on the employer, and on the economy of the country. And India is an amazing market to work in the financial services industry. If you're looking to upskill in the financial services industry, CISI, Chartered Institute for Securities and Investment, is one of the world recognized institution, and we at FPA, we ensure that you're getting right resources, you're getting the required support, and you're trained on each and every financial product and contract.